Would being able to predict a break of structure improve your trading? And this video is going to teach you the concept of using imbalance zones to be able to predict when a break of structure is about to occur. I get emails daily asking me, how do I know when a break of structure is valid? So I'm going to demonstrate today not only how to predict a break of structure, but also when they are valid. Let's head over to the charts and let me share with you how these techniques will improve your trading today. So let's look at this last move up here on price. We're on the Euro USD pair on a 4-hour time frame. And the first thing we need to look at is where the market creates this manipulation from this low in the market. We mark this level across. This is a manipulation to the downside. What is this manipulating into? Well, if we look back on the chart, we've got an area of demand here. We're just going lower into this demand zone to pick up more orders for the market to go higher. So now we can identify, yes, this is in hindsight, but we can also identify the market breaks this structure here, which is indeed a valid break of structure. So how can we look at actually knowing ahead of time that this is going to happen? What we can actually do is use the imbalance zone to predict when that break of structure is about to occur. That's going to allow you to capture entries earlier on before the break of structure actually even occurs. Now let me demonstrate this on this move here first. This move to downside left this big area of imbalance. That's what this red candle is showing you right now. It's a leftover area of imbalance. Now if you're not sure about imbalances, do not worry. There's a video at the end of this video which will demonstrate you exactly how you can use these imbalances in the market successfully and how you can actually trade them. But this is showing you how you can predict that break of structure using the imbalance zone. So after we see this reversal from this low, where we take the stops of this low, we continue to go back up. Now there is a way to understand the way the market reverses here. Now that is something that I teach in much more detail inside the masterclass course, and there is a link in the description if you want to check that out as well. But what happens here is the market continues up. Now when we see this area of imbalance removed and actually closed through by this bullish candle, that is a signal to me that this high will be taken and a break of structure will occur. That is how you can predict a break of structure is about to happen. And look what happened on the next candle. We had a break of structure. This is called the origin of imbalance. Now what is happening here, the last imbalance, once it's closed through, demonstrates to me the previous high will be removed. So that happened. You can see what happened there. Let's remove this area and let's continue forward on this chart. So the market here creates a reversal. We reverse right here in the market. We fall back down. Where is this going to? Well, this is going to this area of demand, which was left over when we broke structure. That's the area that broke structure. So this is showing me it's a valid break of structure. The market comes back, and that's another entry you can take. It's confirming a valid break of structure once we see the market moving away, leaving an area of demand. And what we need to see above that demand zone is an area of imbalance. And that's exactly what we have sitting right here. Is a very small area of imbalance here in the market. And even this area is an area of imbalance left over. Now, of course, you could have caught a trade here to downside, but that is a completely different thing, not for this video. This video is just to teach you the break of structure technique, how you can use these imbalance zones to predict when the market is about to break. Now, as far as being a valid break of structure, this is a valid break of structure as long as I don't see the market reversing straight away, closing back through this level right here. It's important I don't see the market push up and close straight back down. That then is not a valid break of structure. That is actually showing me a reversal in the market. And again, this is not something I teach in the YouTube channel. It's more something I go through inside my order flow section in the masterclass course. But what happens here, the market comes down, we spike through this level, we don't close it. We even go into this level as well of imbalance and we don't close that, which is more critical. And then we actually go into the demand zone and we create a reversal out of this area and the market continues to go up. So again, how do we predict the market's going to break this high and be another valid break of structure in this trend? We use the last imbalance zone. Once again, this is our last imbalance zone. That's my origin of the move to the downside. What we're looking for is a close through this imbalance which will then indicate to me once again that the likelihood of this break of structure will be taken. And that's how we can predict that break of structure will occur. Now we haven't quite closed through that imbalance yet, so let's just go forward. Now we've closed through that imbalance. What we need to do now is to look for a trade up to this high. So we need to see the market come back for an area to take a trade. Now that could come back to an area of imbalance, a previous swing low for an entry. Let's just go forward price. We just created actually here in the market some liquidity, equal highs right here. This is great to see that we created some liquidity. That means at some point the market will want to take this area of liquidity and break this high. Now we've already predicted this area will be taken. We will have a valid break of structure at this area because this area was closed through. I can remove this. I'm just going to place a line on the chart instead. So we can predict now that the market will take this high. And we're looking now for a pullback into an area of imbalance or a swing low. So what I'll be looking for now is any pullbacks to these previous swing lows or into these areas here for potential buy. Let's go forward price. So we've actually just closed straight through this area. That tells me now that this area was closed through. And again, we can identify the same things just happened. If I was to mark off this level here, that's our origin, okay, our origin of the imbalance zone. Once we closed through, which unfortunately didn't happen until this candle. Now, if it had closed down here, then I could have predicted that this low would have been taken as a break of structure. Now, is it a valid break of structure? Let's go forward and see what happens. Remember, we need to see the market hold and not come straight back and reverse the market. So let's go forward in the market. And there we go. So what we've just seen here is that we've come below this low and we've closed back up. Now that's showing me this is not a valid break of structure. This was a valid break of structure as we saw the market pull back and then continue away. What I've seen this time is a full reversal of this area of imbalance. This area of imbalance here was never closed through. We just went lower to fill some of the imbalance before we saw the market continue higher. But here, I've actually seen a full reversal. So now what I'm expecting is to see the market perhaps to pull back a bit, continue up and take this high. So now is a great time to look for a trade to go to the upside. Okay, let's continue with this market and look what happens. We go up and we take this high. So that's how you can predict that the area of this swing high was going to be a break of structure. So again, we can do the same thing again. We could have used this move here in the market and we're going to predict again that once this level here was closed through on this small candle, this area of liquidity would have been taken, and that was taken on a small pullback, continuation up. So what do we now need to see that this is a valid break of structure? I need to see a close back up, continue higher. There is our close back up, continuation higher. So now if we created now on this candle, which I already know in hindsight that this is going to be an area of leftover imbalance because it's a blue candle. But what I now understand is that if this imbalance is not removed straight away, this is a valid break of structure and we will continue up. So let's go forward. Now we have an imbalance left over. If this closes back down above this swing high, this is no longer a valid break of structure and a reversal could happen, and I may be looking for sell trades. But if we continue up, it's a valid break of structure and then I can look for buy trades. So we continue up at the moment, looking for this high to be broken, and we've actually closed back down. That now demonstrates to me it's not a valid break of structure head to the upside at the moment. And the market needs to come back to find an area, most probably back at this origin once again here in the market for another move higher. Again, if I was to see the market closing through here, this level and this imbalance, then we're expecting the low to be taken. You could say the same thing for this smaller trading range from this low to this high. Once we closed here in the market, once we closed through this level right here, we just mark this level out. Once the market here closed down through this level, I know with 100% accuracy that this low will be broken, meaning I'm predicting ahead of time this will be a break of structure to the downside. Let's see if I'm right. We get a pullback, and there we go. We wick through that low. That is how you can start predicting those break of structures before they even occur. Like I said, I'll be looking now for the market probably at this area. We just about filled this imbalance, but we may go up now to take this swing high to then drop down perhaps into this imbalance below. Let's see what happens. We could just drop straight down. We've dropped straight down and we're going towards this imbalance. And once again, I need to see this area hold to see if we can look for any buys. Look what happened. The market's just wicked into this area of imbalance, nearly to the 50%. And what I now need to see for this high to be broken, and perhaps even this high, is for this level to close here. Now, looking at the markets, once you understand what's going on, if we see it close through this level, not only can I predict this high will be taken, but also I can predict now, potentially, this high will be taken as well. So we go forward, we close through this level. I can now 100% say that I know this high will be next to be taken. And it's taken. That's how you can predict where the market will break structure. And we continue on. And there you go. We've now broken this high. So I'm sure I've demonstrated enough on this chart to show you how you can actually predict the break of structure before it even occurs on the chart. And I can also share with you with accuracy as well, whether it's a valid break of structure, understanding when it reverses or the continuation. Now, if you've been struggling in your trading with the break of structure, perhaps leave a comment and let me know how this is going to have an impact on your trading with the break of structure and how it's going to help you master the markets much more. And if you want to skill up your trading to the next level, then you need to check out that Forex Masterclass course, and there is a link in the description of this video. But popping up right now is a video which is going to teach you more on the imbalances and how you can start using those imbalances, looking for trades and understanding how you can apply all this with this strategy you've just learned.